Welcome to the DSMR. This briefing highlights where the smart money is flowing as of this video date. As a quick primer, when smart money is distributing, retail investors are buying and institutions are exiting positions. And when smart money is accumulating, retail investors are selling and institutions are building positions. This data, including charts, graphs, and the ability to create bottoming signals, are available to you on bottomfinders.com. Head over there after the video to create a free profile. And with that, let's start the daily briefing. In communication services sector, smart money is concurrently executing markdown and markup strategies. Institutional investors have entered a markdown phase within diversified telecommunication services, entertainment, and media, systematically driving prices lower towards a discount zone to generate supply and discourage retail participants. In contrast, smart money has entered a markup phase for interactive media and services, pushing prices upward into a profitable zone to foster retail demand through rising price action. In the discretionary sector, highlights aggressive institutional accumulation alongside clear pricing drawdowns. Smart money has officially entered an accumulation phase within distributors and household durables, capturing shares directly from the supply pool and absorbing positions from exiting retail investors. Concurrently, institutional players are in a markdown phase across automobile components, hotels, restaurants and leisure, and textile, apparel, and luxury goods, steering valuations downwards to establish a discount zone. In consumer staples, mixed institutional dynamics characterize this sector. Smart money has entered a markup phase within consumer staples distribution and retail, lifting prices towards a profitable zone to attract retail investors via positive price action. Conversely, a markdown phase has been initiated for food products and personal care products, where institutions are suppressing prices towards a discount zone to generate supply. The energy sector reflects unified institutional buying pressure. Smart money has firmly entered a markup phase across both energy, equipment, and services, and oil, gas, and consumable fuels. Institutional capital is actively driving these prices upward into a profitable zone, utilizing rising price action to generate demand and draw retail participants into the market. In financials, a sharp tactical pivot is visible. Particularly in real estate lending, smart money has officially entered an accumulation phase in mortgage real estate investment trusts, quietly building positions from a supply pool as retail investors exit. Meanwhile, a markdown phase remains dominant across banks, consumer finance, and financial services, with institutions pushing prices lower into a discount zone. In healthcare, high stakes capital rotation defines the footprint of this sector. Institutional investors have entered a major accumulation phase within biotechnology, aggressively securing shares from the supply pool and absorbing positions from departing retail investors. Simultaneously, smart money has entered a markup phase for healthcare providers and services to generate demand through rising prices, while healthcare technology rests in a markdown phase as prices guide towards a discount zone. The industrial sector exhibits a distinct split between defense and commercial manufacturing. Smart money has entered a markup phase within aerospace and defense, pushing prices upward into a profitable zone to cultivate retail demand. Conversely, institutions have entered a markdown phase across building products, machinery, and passenger airlines, driving lowering price action to establish a discount zone and clear out retail demands. And technology continues to serve as a primary vehicle for upward institutional momentum. Smart money has entered a definitive markup phase across communication equipment, semiconductors, and technology hardware, storage, and peripherals. Across all three industries, institutions are pushing prices into a profitable zone to generate demand and attract retail investors through rising price action. The materials sector reveals well-defined multi-phase capital deployment. Institutional investors have entered an accumulation phase within paper and forest products, steadily buying from the supply pool as retail exits. Meanwhile, smart money has entered a markup phase for chemicals to drive prices higher, while construction materials and containers and packaging are undergoing a markdown phase as prices are systematically guided lower towards a discount zone. Real estate presents a singular tactical focus. In the real estate management and development industry, smart money has entered a markdown phase. Institutions are pushing prices downward towards a discount zone, lowering price action intended to generate supply and chase away retail investors. In utilities, heavy accumulation highlights institutional positions within defensive utilities. Smart money has entered an accumulation phase within multi-utilities and water utilities, capturing shares from the supply pool and buying directly from retail investors exiting their stakes. Concurrently, electric utilities and independent powers and renewable electricity producers are experiencing a markdown phase, with institutions softening prices towards a discount zone to generate supply. In closing remarks, the goal in investing should be to move with smart money and not against it. And our goal is to find where the smart money is. An ideal bottom for going long is when smart money has exhausted accumulation, and that's the dark green lines. Those are the bottoms we look for at Bottom Finders. We will include the text in the video description. If you find this report helpful, show us some love by clicking the like and subscribe, and we'll see you at the next one.